I'm Deborah Borchardt, and this is your midday market update. Well, when we look at all the indices, they are higher, but only modestly so, and the volume's not crazy, so it's just kind of really a quiet day here on Wall Street. You know, one group that has been doing well over the years, the financials, and we really need them to kind of keep this rally going, but they may be losing a little steam here, and we've got this vote on the Volcker rule tomorrow. So Mark Newton is going to break it down for me. He's from Greywolf Equity. So you're starting to see some kind of weakness in financials, right?
Well, we saw financials peak initially back in July, and they had probably a 4-month pullback. And then in the last month, we actually saw a decent rise. Financials sort of joined the leadership, but just in the last couple of days, you've seen them start to peter out and turn down again. And this is important because, you know, coming into this week, we're hearing all this news about the Volcker rule. Potentially, it might be a lot more stringent, and you know, that could definitely serve as pressure on the group, and it has in the past. And it's something for investors to be concerned about after this little bounce we've seen in the last month.
Well, certainly a lot of these regulations stem from the 2008 financial crisis. They've been trying to get things done for years, and it's been fought against by the financial firms, and it looks like now it's really going to happen.
I think it probably will, and it seems to be that we're in this era again where you know, financials are being attacked, and it's reminiscent of the late 30s where Roosevelt you know, was going after the big banks, and yet again the financials are, you know, we're under a little bit of pressure, and so you know, that certainly could be important. I think over the next couple of years, I mean, investors have enjoyed big gains in the financials, primarily in 2009 after the big bounce, and they went sideways for a while. And now we've seen the 2s-10s curve start to steepen quite a bit. Interest rates are up to the highest level since September, which ordinarily would benefit the financials, provided it doesn't go up too sharply. But yet financials in the last week have been under a little bit of pressure. Yeah.
Well, I mean, to be fair, they're going to be hit with millions, if not billions of dollars worth of fees that they have to pay to get out of all the trouble they're in. So going forward, some of these quarters are going to look pretty ugly.
Anytime any sector is under pressure from the government by any shape or fashion, and it reminds me of IBM back in the late 70s when they had problems with antitrust regulation and the stock went nowhere over a period of a decade. And so the financials, being under this ongoing pressure, have started to show a few signs of underperforming in the last week. And you know, my thinking is, as long as they're under this pressure, and the Volcker rule is something that has caused a lot of polarity from both sides. Some people say it should be more stringent. We don't want to repeat of 2008. Other people say we're going too far in the opposite direction. It's 180 degrees, and banks need to be able to take some risk for this economy to be able to grow.
All right, well, we will keep our eye on those financials, but again, seeing a little bit of pressure with this Volcker rule, that's going to be all we're going to talk about for the next couple of days. That's Mark Newton from Greywolf, and I'm Deborah Borchardt with The Street.